What's going on, everybody? It's Jeff here. Welcome back to the channel. I hope all of you had a wonderful Thanksgiving. I'm excited for the market to open this week. Last week, there was just low volume. Investors took an early, leave to enjoy their holiday with their friends and family. And like I said, the market just continued to base. Now, there's a couple things I want to mention before we get into the topic of this video, how it might affect the market going forward, and what to expect this week. So we're going to cover that briefly, really quickly. Here is the SPY. We've once again broken out of this $394 to $400 range. Now, is it going to be another fake out like we had to the upside and to the downside? Or is this 400 level going to hold as support and we're going to make a bigger move to the upside, potentially get over this 403 level? Well, that all depends on, in my opinion, two specific things that we're going to cover. The first is everything that is happening over in China right now. Okay, their Communist Party, as you can see from this picture here, they have a zero COVID policy and they're not backing away from it. Now, Apple has a huge problem with an iPhone factory in China, and they're estimating that Apple might lose potentially $1 billion a week in iPhone sales, and that could total out to be $8 to $10 billion, okay, because of this factory being shut down. Why is that important for the entire market? Well, first of all, Apple makes up the biggest market share for SPY. So when Apple pulls, the entire market is going to, with it. When you're looking at this 1 hour chart, you see something that sticks out immediately to you, okay? You've got, SPY sitting up here towards the high of this range, and Apple should be around this 155, 166 if it was closely correlated with SPY. So when Apple is weaker than SPY, if Apple continues to pull to the downside, which obviously you've got this 147.50 area, okay, which is this chart is looking very, very weak. We break through this, pulls to the downside, the market has a lot of room to the downside. So keep an eye out on the futures that are going to open probably about 6 hours from as I'm making this video, what happens overnight and where things go on Monday. Now, the next thing I want to talk about is going to be happening Wednesday, the 30th at 1:30 Eastern time. Okay, Fed Chairman Jerome Powell is going to be speaking again. All right. Now, last time the Federal Reserve, they came out a little bit dovish saying, listen, we're going to slow, the pace of hikes. We knew that 75 basis point wasn't going to last forever. Here's what investors are going to be, really focused on going forward. Last time Jerome Powell had given a speech after the Federal Reserve was dovish was Jackson Hole, where he really shocked investors. The market pulled very, very hard. That happened at the end of August. Now, the Federal Reserve and Jerome Powell still have a lot of work to do when it comes to inflation. Okay, and investors are going to be, really keeping a keen ear open to not only the inflation numbers, okay, and not only, how long they're going to potentially, keep their rates, their rate hikes going to be slowing down for, how long they're going to be able to keep their rate hikes or rates up before they begin to lower them. But now here's where things are going to change. We're going to be slowly pulling away, and this is going to happen over the next few months, but we're going to be slowly pulling away from that inflation worries. And now things are going to shift, and we're going to be focusing on stagflation. What's the potential for stagflation? Okay. What's the potential, for deflation? Also, recession. Those three words are going to be more important over the next 6 months than inflation is going to be. There's a lot of signs that inflation is coming down. And here is the reason for that. Okay. And remember this. It has nothing to do with the prices that we see at the grocery store. It has nothing to do with the prices that we see anywhere, okay? The price of the pump, the price of oil has nothing to do with that. It all has to do with how CPI is calculated, okay? Now, if you look, gas was up 60, 70%, okay, from, 2020, let's say July 2021 to where it was in July of, 2020. But however, if it's down 20%, okay, even though it's still up an astronomical amount from 2 years ago, the calculations and how it works, if it's down, if gas is sitting at $4 a gallon, it's still up, it's still high. All right. However, it's going to show a 20% year over year decrease. All right. So you have to keep that in mind, how their calculations work, and inflation will begin to slow down. Now things are going to start to shift. Keep an eye out for that. Like I said, Monday, I expect a little bit of volatility. Volume coming back into the market, after a long weekend. Tuesday, potentially slow down. And obviously Wednesday, investors are going to have their ears open waiting for Jerome Powell to speak. Okay, now let's get into what I want to talk about in this video. Last video I made, it was covering this article that had come out. Is Amazon planning to invest $1 billion a year in movies? How it could, you watched AMC pop a little bit, try to get over that $8 level of resistance that we've talked about for quite some time. how it could potentially affect or help AMC, okay, and what are the positive effects of it. Now, obviously, this isn't going to directly go towards AMC. We're also talking about $1 billion here. This isn't 50 million or 100 million. It's $1 billion. AMC has a lot of theaters. It dominates a good percentage of the market share, and obviously it would benefit. Now, over the weekend, things started to change a little bit, and it really kind of brought me back to deja vu. If you guys remember, going all the way back to probably about a year and a half ago, the rumors of Amazon potential buyout, and then you also have Disney potential buyout. We want to talk about this in a little bit bigger of a fashion. So first of all, let's focus on Disney. The first thing I do want to mention is the CEO change. Now, Bob Iger, he was one of the most successful CEOs, as it's stated right here. A lot of people like him, investors like him. They're looking for a change. They're really focusing on the growth of Disney. Okay, now Disney did start to branch out. All right, they had their Disney stores all over the country. Okay, they had purchased ESPN. They had really started to spread their roots a little bit deeper. Okay, it is very difficult to get as many people as they can to come all the way down to one of their two locations, either Walt Disney World in Florida or Disneyland all the way over in California. It is much easier to be able to sell to where they are. All right, and one thing that Disney had kind of been a little bit late to the party was their Disney Plus, their subscription-based service. They had all of these movies that they could quickly stream, create a platform. It just came out at the end of 2019. They were a little bit late on that, and obviously people flocked to this really, really quickly. Now, when it comes to total market share, Netflix is obviously continues to be the leader. All right, Prime Video is number 2, and it is included obviously with their subscriptions, and a lot of people do shop online, okay, and they will use that as well just because it is included. And Disney Plus does still lag a little bit behind, okay? So there is a potential for Disney to really want to, get a little bit higher of a, market share when it comes to the streaming services. And what could the potential of them, buying AMC actually be? Well, they've closed down a lot of their stores as they're really trying to, rebrand a little bit and shift their focus, and also try to make things a little bit more symmetrical. Now, Disney is not afraid to spend money. You see, they dropped a lot of money to buy ESPN, and they've been pretty, successful with that. They are obviously struggling as people are moving away from cable, and they're trying to shift that business model. Now, what could the potential be for if Disney were to buy AMC? There's a lot to it. One, it would be exclusive. Okay, every single AMC theater would merely turn into a mini Disney World. Okay, where it would attract people to not only be there for movies, you'd have your own Disney stores there, your own Disney experiences. I mean, we were just looking at tickets to buy Disney on Ice at one of our local rinks. There's a lot of things that are happening. The potential is there, but the goal here is, let's not get everybody hyped up for something that is really a huge, huge undertaking. And let's talk about what the benefits could be that are a little bit more practical. It's where the exclusive deals could come from. Okay, now you have Amazon that says, listen, we're going to invest $1 billion. You've got Disney coming out saying, listen, we're looking to be able to put our movies exclusively in theaters and be able to get them there first. Before we do this, how would that be able to help them as a company from a monetary standpoint? Now it becomes, okay, well, who's going to be the first one to be able to bite, and where can AMC position themselves to be able to get some exclusivity? Okay, how would that help the stock in a little bit more of a practical fashion? Well, think about this. You remember back in 2021, you had these companies, all of these EV companies, Palantir, Microvision, there were a ton of them. All right, all of these biotech companies that were all, valued based on potential future revenue. Now, this wasn't locked in future revenue. This was literal potential future revenue. And we were in an entirely different market, but investors were buying it up saying, yeah, in the future, you could potentially make this money. So we want to get it now. That's where their valuations would prop up to. And then you've got AMC, where investors, and I'm talking about, your big funds, your public media as well. Okay. They don't look at the future revenue at all. It's all focused on their debt as of right now. All right. Now, Adam Aron has, while this is completely, subjective and room for argument, and obviously there is both, sides to whether he's done a good job trying to pay down some of their debt for the company. That's a whole different story. Okay, but he has had the, the openness to be potentially, sign something exclusive in order to take action to pay down some of their debt. That's the biggest thing that hurts them right now, and that seems a little bit more practical in the short term than a massive buyout. Okay, so one last thing I want to talk about before I wrap up this video is, and this also could affect Apple and the entire market going forward, is over this weekend, all right, there was potential rumors that, Google and Apple are going to be like, listen, you know what? We're going to take Twitter, off of our, our app store, okay, and Google store. And, people that have these, Apple phones and Google phones, they're not going to be able to download Twitter, and that's just going to, crush, Elon Musk and Twitter, right? And so, he had come out and said, listen, if that happens, well, I'll create my own phone. Well, here's where things is the potential there for that? Absolutely. One, he has a massive following, but also think about the undertaking to be able to do that, right? So before even you can formulate a plan, before even like the construction of it, the research and development and all that money coming out up front, he could literally say, listen, these phones are valued at $1,000. We're going to take orders right now for $500, raise a ton of money. Okay, similar to almost what he did with the Boring Company and the flamethrower, raise a ton of money, then use that capital to be able to create it. And therefore, it's not a massive risk that they have. Now, they do have the risk that they're taking people's money, but from a financial standpoint and a capital standpoint, it's not a massive risk. Well, think about how, companies like Disney and Amazon, when it comes to buying them versus signing something exclusive, knowing that they have work to do and therefore it'll be exclusive to AMC. They'll be able to show their movies in their theaters. It's a little bit better of a risk reward from a business standpoint than them trying to buy a company that, we are in the potential of on the brink of a recession as of right now. And also AMC, it does have a lot of debt that it does have to pay off, right? So it'd be a massive undertaking, and it would be, a red line on their books for quite some time. I think the probability of, like I said, something exclusive happening out of this, which would lock in, right? Would lock in a massive amount of revenue for AMC, okay, is a much more, probable thing to happen over the next, let's say, potentially 6 months than an actual buyout. Like I said, if a buyout does happen, I think that would be massive. These are two, huge companies that obviously know exactly what they're doing. Just talking about, obviously this is, just my opinion, but also something that would be a little bit more probable. So guys, that's it for this video. See you in the next one.